Hello and welcome back to the Swiss Crypto Podcast. I am Smiles, and in today's episode we're going to have a talk about the current situation, the current market situation, not only concerning cryptocurrencies but also concerning the current stock market situation, the current situation that we have in the US with the rate cut, and of course how the corona pandemic is influencing the whole economy. So stay tuned and let's get into it. To start this week's podcast off, I want to give you a quick overview on what I'm going to talk about. And I also have to say that I am not a financial advisor and you shouldn't take my opinion as financial advice. Of course, I am not allowed to give that. Every other crypto podcaster is saying the same, and after that, they're going to give you some financial advice. Just concern this podcast as my own opinion, how I see the market, how I understand it. And if you have another opinion, if I don't understand something in detail and you want to add something, please do that. I'm always open to learn something and to educate myself. State that in the comments down below. Now, what are we going to talk in this podcast? I am not going to talk about regulation. I already made the announcement in the intro that we are going to talk about the current market situation, and that's not that easy at the moment to do because there are different factors that are playing into the whole thing. We as a crypto community are mostly interested in how the crypto market is doing. Of course, some part is saying they are in for the tech and only the tech. Of course they are, but let's be honest, we're all in it to also make some money and to hopefully brighten our future financial wise in the upcoming month or years. And next to our concerns for the cryptocurrency space, there is also all the other economy going on at the moment. And there's a lot happening with the coronavirus, but also with the oil price going down, with the US stock market going down, and so on and so on. So I want to structure this podcast a little bit and divide it into three main parts. The first one is going to be a section about the coronavirus and how it is influencing the stock market or the economy as a whole around the world. The second section will be about what the US government just recently did 2 days ago to improve the economy situation, especially at the stock market, and how that is going on and how it is doing. And third and last, I'm going to talk about the influences that I see and how I understand it. I have to stress that it's my opinion. I'm not an expert in that. But the last part will be on how all these things influence the cryptocurrency market at the moment. I've had several different friends contacting me in the last few days, asking me what I'm going to do in the next few days or in today's situation with my cryptocurrency assets, if I'm investing into stock markets, if I'm investing more into cryptocurrencies, if cryptocurrencies are over now. And I want to also talk a little bit about that in the third section of today's episode. So let's start off with the very first one, the coronavirus. As most of you guys probably have heard, we have a pandemic going on all around the world. In most countries, we have different cases of the coronavirus, and several countries have now shut down and locked down their borders and are trying to protect their citizens from this virus. The same has just happened yesterday in Switzerland, where I live, and the government has advised the public to stay at home whenever possible, to not go out and stay healthy, and to try not to come in contact with other people. Now, apart from these drastic measures that are now influencing our everyday life, the current crises of the coronavirus is also influencing our daily businesses and our economy. In a lot of European countries, the companies have told their workers to stay at home and try to do home office. And wherever that is possible, of course, it's nice. The work can be done, still can be done, and the company still makes money. But if you are running a company that is supposed to work outside of the homes of everybody, that is supposed to work on working and construction sites, that is supposed to work in houses of other people, like doing electricity stuff and so on, these are measures that are really putting pressure on especially those companies. And those companies are not able anymore to bring in the money to pay their workers. And that results in people not getting paid, people not being able to pay for their accommodation, to pay for their apartments or houses, and so on and so on. So you'll see the domino effect has already started. And that's a huge problem that will come to us and that we have to face in the upcoming weeks, and I'm pretty sure also months. And this also puts a lot of pressure on the economy. Because of that said domino effect, a lot of people are not getting paid, a lot of people don't get the money that they need to live. And of course, if that is already a problem, these people are not going to invest any money that they have on the side into any asset at the moment except for cash. In times where you have to literally fight for toilet paper, nobody is going to invest into stocks or wants to invest in stocks, at least not retail investors. And of course, they want to go around every possible risk, and ergo they won't invest into assets that are more riskier. In this case, I believe that will be cryptocurrencies too at the moment. And that will be, I think, one of the biggest factors that we will see in the upcoming months influencing the investors' behavior around the world. And that will be felt especially with investments that are riskier than others. Now, speaking of investments, this brings us to our second segment that I want to talk about, that is the current stock market situation around the world and what the US government did to improve the situation. For those that haven't heard about it or aren't into stock markets that much, the stock markets around the world plummeted during the last 1.5 weeks and saw the most dramatic move since the 2008 financial crisis. Now, if we want to find a reason for that, as I said, I'm not an expert, but if you think back on what I just told you about the influence of the coronavirus on the economy, on the everyday people, on the earnings of everyday people, and the investment behavior, on what it will do with the time horizon of investors and the risk behavior, it's pretty understandable that a lot of investors, also bigger investors, are unsecure when it comes to investing and are probably selling off their assets on the markets. And that could lead into such a big downtrend as we see it now at the stock market. You don't have to be a big investor to see and feel that this is not really a good direction when all the stock markets are going down. And that is also what the Federal Reserve has seen, what a lot of governments are noticing. And of course, they try to prevent further plummeting of the stock market in the upcoming weeks. If that will be successful or not, we are going to see. But if we have a look at the stock market at the moment, it is not really. So what did the big governments, and I'm talking here especially about the Federal Reserve in the United States, do to help the US stock market and to try to stabilize it? On Sunday this month, that was the 15th of March, the US Federal Reserve stepped in and said that they are going to lower the benchmark interest rates to near zero. And it also announced that it would buy $700 billion in treasury and mortgage-backed securities back to try to slow down that downtrend that we see now. Now, what does this mean if the Fed is cutting back its interest rate to near zero? For all the people that aren't very familiar with economics, you have to know if you lend money to someone, you want to have an interest out of it. If I give my friend $100, I am going to give up on that money for a certain time, and in return, I would like to see, let's say, 1% of that money being paid back by my friend when he gives me back those $100. And that's how I make money, by lending some of my money. And the same principle works for the federal banks that are giving out money for big institutions, mainly big banks, meaning that banks can now get money for lower interest rates and will offer and lend that money to investors for also lower interest rates. So that means that you as an investor, if you want to buy a house, you will have to pay less to the bank to get some starting capital, to get money from the bank to invest into buying a house or into buying a hotel complex and so on. And the Fed is doing that to push the economy. So it gets more attractive to take out debt and to put that money into the economy, back into the economy, pay wages with it, pay people with it that work for you and do a certain task. That money gets to those people, they spend it again, and so on. So that's the thought behind making debt less costly as they did it right now. And all of that in an attempt to stop the stock market and also the economy from going down the death spiral, if you want to call it that, even more. But in contrary what the Fed expected and hoped, the investors didn't really react that positive on that rate cut. Of course, it is nice to take out debt for less money, to take out debt without having to pay something extra when you pay it back. But at the moment, the economy and also the investors are so uncertain on what is coming to them in the next weeks and months. They didn't react very positive, and the stock market didn't go up that much as they wished. Now, let's think back to these first two sections that I talked about. First, the influence of the coronavirus on the economy, that people are not going to invest into stocks and assets that have certain risks because they are uncertain on how the future looks like. And we have now the Fed that is trying to push investors into investing more money by making debt less expensive or even unexpensive at the moment with an interest rate of 0. But that didn't work out, and investors didn't go and invested that money back into the economy, and the stock market is still plunging. Now, coming to the third section of today's podcast, how does this all influence the cryptocurrency space? And if you have ever heard something about cryptocurrency, if you're listening to this podcast, I'm pretty sure you know how the prices look at the moment. The cryptocurrency space, the prices also dropped together with the stock market. Bitcoin lost over 50% of its value, going down to even 3,800 in a flash crash, and moved back up to something like 4,900, something like that. So the whole cryptocurrency also seemed to follow that trend of the stock market. Now, why is that? And is it a good time to buy? Should I invest into cryptocurrencies or should I invest into the stock market? Now comes exactly the point I told you in the beginning. If you are still here, every crypto podcaster is telling you that they are not a financial advisor, and still they give financial advice. This is only how I see things. Now, as I mentioned before, I don't think that people are now investing into something that bears any big risk. May it be stocks or may it be cryptocurrencies. At the moment, the cryptocurrency space, or even for the last 2 years, let's be honest, the cryptocurrency space was just more volatile than the stock market, and people are not liking volatility that much when it comes to uncertain future. So the time horizon gets shorter. People are more concerned on what's to come in the next few weeks and months than they are on what's to come in the next years. We have a lot of uncertainty going on with the coronavirus. We don't know how it will affect our daily life, our earnings in the next few months. So I think people are not investing into cryptocurrencies because it's just too risky at the moment. And that's exactly what I think is the reason for the big plunge of the cryptocurrency space too. Now, to all the people that have asked me if it's a good time to buy, whether it be stocks or cryptocurrencies, you should always do your own research. Of course, it is good to buy in low and sell high. If it would be that easy, we would all be millionaires by now, of course. With the stock market, if you bought in after the dip in 2008 and sold 3 months ago, you made pretty good gains. If you bought in before the big rally of cryptocurrencies in 2017, you also made good gains. So there's no one that can tell you when it is the best time to buy. What you should focus on is what's the value, not the price. What is the value behind an asset that you are going to invest in? If I'm going to invest in Netflix, I see the value that people are going to stay at home in the next few months because of that virus. I hope they don't, but that could be. I see that Netflix has a value because a lot of people don't know what to do at home. They are going to look for options and they will probably buy a Netflix subscription. So that would be a reason for me to hope or to see the Netflix stock going up in the next few months. That is an example of value and price. If I can see a value behind Bitcoin, behind blockchain and how it is implemented, then I'm definitely going to buy Bitcoin or every other cryptocurrency that I see a value in that I think that will grow in the future. So I know I now talked a lot without saying that much, but you should take that really as an advice, and I can give you that advice. Always search for the value behind the asset that you want to invest in. For me personally, my opinion, Bitcoin and all other cryptocurrencies are now a steal. They are now even more a steal than they were before that drop, that Corona drop right now, because I see Bitcoin's value at least 100 to 500,000 US dollars. If you know what the Bitcoin halving is going to do, if you know that Bitcoin is deflationary and not inflationary, then you know that there is value behind it. If you know what Ethereum is capable of doing with its smart contracts, if you know what XRP and its company Ripple is going to be able to do in the future in the economy, then you know that there is big value behind it and that they are highly underpriced at the moment, in my opinion. Is the market, the stock market or the cryptocurrency market going to go down even more? Could be. Nobody can tell you. I personally think yes, it could, because we don't know how the coronavirus is going to turn out. We have too much uncertainty in the upcoming weeks or months. As soon as we have a company that is talking to us about a corona vaccine and when it can be distributed, how much it will be, then I see the stock market and also the cryptocurrency market going up again. When that will be, I can't say. Now, if you don't want to miss the lowest point, and that's the FOMO that a lot of people are talking about, that's the fear of missing out. Of course, you want to buy at the lowest point possible and sell at the highest point possible. What I do is I usually buy in regular time frames, meaning that I buy every first Monday of the month, or I'm going to buy every Thursday every week for the same amount. Doesn't matter how high or how low the cryptocurrencies are. That way I get a price that will be quite low. It won't be the lowest, but it will certainly not miss the low points that we have now, and it will give you a nice and balanced price of your assets. The same could go for stocks and bonds. I'm not big in investing in stocks anymore since I discovered cryptocurrencies, but yeah, that's just how I would do it with cryptocurrencies and how I see the market. Always do your own research, look at what the market is doing and where you see value behind it. Now, we are slowly coming to an end of today's podcasts. Those were the 3 sections I wanted to talk about in, I think, the longest podcast I ever did on this channel. I've been offline for quite a while. I wasn't able to produce any content for this channel. For everyone that is staying with me and listening to this podcast to the very last minute, thank you very much for listening. I really appreciate that. With the current situation, I can't promise on how many podcasts I'm going to make in the upcoming weeks. It could be that I'm going to be drafted to the military in the next few days, so that's quite uncertain. If I don't have to go, then I'll try to make more podcasts and try to keep you updated on what is going on in the cryptocurrency space, even though we have a lot of other things going on at the moment. So thank you all very much for listening and see you in the next episode.